Thank you for joining us at XM.com for this Forex Preview. We'll be looking at the U.S. non-farms payroll report and manufacturing PMI out on Friday. I'm Cristina Marujos. Joining me today is Marios Hadjikyriacos, investment analyst. So, Marios, the upcoming data, one would argue, is rather important because it will give us a first glimpse into how the U.S. entered the fourth quarter. Recent data has been on the weaker side, so should we be expecting any positive figures in Friday's releases?
Well, not really, at least not according to the forecasts. Now, the forecasts suggest that non-farm payrolls rose by only 85K, which is a really low. It doesn't even cover US population growth. The unemployment rate is expected to have risen a little bit, but from a very low level, while wage growth is expected to have picked up some steam. Now, there's a specific incident this month that is likely to push down on non-farm payrolls. There was a strike at General Motors that saw some 50,000 workers picket, and those workers were counted as unemployed, which means that is going to artificially lower this month's NFP print. Funnily enough, it will boost next month's NFP print because they will be recounted as employed because the strike has ended. Now, what's important here for the dollar is that I think that the risks surrounding the dollar from the non-farm payrolls release are tilted to the upside. And here's the logic. If we see a disappointing print, something much lower than 95K, the market might say something like, sure, it's disappointing, but there was this strike as well. You know, it might be a one-off thing, and it might not have a lot of impact on the Fed's thinking. So if we do see a disappointment, I think we are going to see a relatively small downside reaction in the dollar. But if we see a positive surprise, the market might suddenly say, whoa, look at that. The economy was surprisingly strong. That was despite the strike. Next month's NFP print is going to might be even stronger. So, the US economy is actually not in a bad place, and that might provide the dollar with a significant boost. So I think that the risks around the dollar are asymmetric and tilted to the upside.
Now, let's stay on the dollar for a little bit because we saw the Fed cut rates again yesterday. It was widely expected. Of course, it did signal that it might pause its easing policy. So markets, of course, did not seem to buy that exactly. So what is the outlook for the dollar now?
Well, to be fair, the markets didn't buy that with very good reason. The Fed said, we want to pause, but if the economy deteriorates, obviously are going to cut again. Now, as far as the dollar is concerned, we've seen it retreat lately, but I'm still thinking that the bigger outlook is positive. And my thinking is this: for all of its troubles, the US economy is still much, much stronger than Europe's, for example. So I'm not ready to call for sustained dollar weakness. And for that to change, I would either need to see the Fed cut rates much more aggressively, or Berlin might decide to roll out a fiscal stimulus package to boost the Eurozone. I don't think either of this is likely to happen over the coming months at least. So yeah, I'm in the camp that is still looking for a rebound in the dollar.
Marios, thank you for joining me today.
Thank you.
And thank you for watching this Forex Preview here at XM.com.